Hi, welcome to this TMS tutorial video on how to help clients selling and buying. So this video is all about how you can budget for those costs, how you can work out what the costs of selling are, what the costs of purchasing are, how you can break this down for clients and really help them plan for that next move. So if you're on your homepage here, to do this, you need to click the home sale and purchase. If the client's already, if they're already existing here, you'll be able to click on any that are existing, or you'll just need to click add a new strategy session. So I just added a client earlier, so they're already in here, so we can click on the details there. If they weren't, then you'll be able to add them here separately as well. So firstly, you need to select the client that you're creating the strategy session for. If you click save, it'll then take you to the right page, and then you can click home sale and purchase, create a strategy session, Wayne, S&P 2025 in BC, and a repeat buyer because they're selling and purchasing. Okay, so the first step is to budget for the sales costs. So here you can put their address in here, and there's some previous information that I was filling in for a previous example. So we have Beach Street. You can always just label it the property address, and let's say selling for 800,000. And then what will happen is it will automatically work out the first cost, which is the real estate cost. So this is based on 7% of the first 100,000 and 3% of the remaining amount. So this calculation is just meant to be a sort of rough estimate of industry averages. So just make sure that's clear to clients. You don't want to say this is the specific cost and then the realtor has higher costs, for example. Just say this is just an approximate amount for budgeting purposes. Do confirm with your realtor what the real estate costs will be, because these do depend. So estimate of real estate cost here as the first step once you put that sale price in. The next step here is to add the mortgage. So if the client has a mortgage, as a lot of clients will, that's also of course a significant cost. So let's say the mortgage is with CIBC, they have a variable rate mortgage, the maturity date, let's say that's in a couple of years, or in 2026. Their adjustment from the prime rate is prime less a half. Their mortgage balance is 450. The payments are 3,000. And then what it'll do, it'll generate, so it shows you what the amortization is here, and it'll show you what the penalties are. So it shows you that the penalty is a 3 months interest penalty. Here, there's 24 months remaining, so this will be the penalty. So if you click on that button, then the penalty will add on to the mortgage amount. So it makes sure that you are factoring in any penalties of paying out their existing mortgage, as well as just the mortgage balance here as well. The next section here is where you can add any line of credit balance. So let's say they have a line of credit here. Let's say of 15,000. Legal costs, so you can budget some of the legal in the sales proceeds as well. So let's just say $1,000. And then other costs. So let's say they have moving costs. Let's just say moving costs. Moving costs, $1,000. Let's say car loan payout. They want to pay that with their proceeds. 25,000. And then where that gets you is all of these costs are added up, and then you can see the net proceeds from their sale. So you know what funds they have once they sell for purchasing. So the next step here is you can go for the budgeting for purchase costs. So this is similar to if you were just doing a home purchase, but these numbers all tie in together. So if you go to a purchase price, let's say they're wanting to upsize and they're wanting to 1.25 for an existing home. Down payment, because it's above $1 million, the down payment needs to be 20%. So we can click on the 20% here. And then it will work out all of the costs here. So if we scroll back up, we can see already there's a slight shortfall here just in regards to their budget. Because we've got the closing costs, the down payment plus property transfer tax already is slightly above. But let's go through and work out the other costs here as well. So let's just say the appraisal is 450, legal costs 1,500, property tax adjustment 1,500, home inspection, let's just say 800, and then so those are the main other costs here as well. So you can see their total closing costs are 277,250, and the total sale proceeds will be 271,906. So you can go through with the clients and say, you know, with this budget, if you were to have the $1 million mortgage here with a 20% down payment, you would be about $5,000 short. So let's say, okay, well, they're saying, well, I need all these costs, I need to pay out the car loan, but I kind of don't want a shortfall. I really wanted to hold back a little bit of funds. So let's play around with the numbers here and let's see how things change. So let's go down to 1.2. And then you can see here down payment wise, so that's 20%, that automatically updated to 20%. And then you can see here they have a bit of a buffer now of $5,000. So the mortgage amount has decreased, so you can go through this with them and say, okay, well in that case, Mr. and Mrs. Client, if we revise the budget to 1.2, of course assuming your sale price is 800,000, then you should have a buffer of 5,000 or so. Now, one thing you can do as well is, let's just say a client sells for less than anticipating, less than hoped. Maybe the wording would be slightly different there as well, or more than hoped, for example, and use your own wording and things like this as well. So let's say they sell for less than they're hoping. So 7, worst case scenario, more than hoped. So let's say they listed for 850, but they're expecting 800. Oh, sorry, the minus there just caused this little error. Okay, so here you can see these numbers have updated. So 850,000, 750, let's just refresh. I think me accidentally typoing a negative there, just so here we can see the amount available. So sale proceeds here, if they sell for more, they'd have a surplus of 54,000. If they sell for this amount less, they'd be 42,000 short. So this is a way you can also discuss with clients, okay, you know, based on this budget, you know, if you were to sell for much less, the purchase price may have to be reduced to 1165, for example. And let's just see how that looks. Okay, so there's still a bit of a shortfall there. You can really show them the impacts of if they sell for less and the shortfalls and things like that as well. So we have 223 and 244. Okay, so they'll need to, if they sell for that much lower, you can see there's a real impact in regards to them having to get that 20% down payment. So 1 million. Okay, so they need to actually reduce it by $1 million. If they sold for 50,000 less, that really reduces their funds available for down payment quite significantly, which impacts the down payment that they'd require, which impacts their purchase price, because there's minimum down payment requirements above $1 million for existing properties. And then if they sell for more, for example, you can say, well, there's a buffer of 50 or 1,000. You know, if you'd qualify income wise, let's see if you sold for more than you're anticipating, what would your budget increase by? Let's say 1.3. Just to play around with the numbers here a little bit. And then a buffer of 10,000 or so. So they may want to keep that. So you can always say, you know, if you sell for more than you'd hoped, then your budget may be up to 1.4. And the key reason that this is changing so significantly is because they need that minimum 20% down. You could also say, well, if you sell for more, you could then use a manual down payment amount, or you could just increase your down payment by 290,000 by that spare 10,000. So then your total down payment will be, and sorry about that, total down payment will be 290. So you can use those funds and then kind of have that bit of a wash there. You could also show them in this scenario adding the 5,000, or you could show them, okay, well, if you sell for more than you'd hoped, how can we reduce the mortgage amount? You still want to buy for 1.2. And again, these are just the kinds of strategies and discussions that you can go through with clients, just running different scenarios, and that's one of the big benefits of using TMS. So the down payment amount of 290, so you can see we can increase the down payment amount, and the mortgage amount is actually reduced to 910 from what it would have been at the 1.2. So you can see, oh, actually I can use those extra funds, that extra 50,000, this is how it changes the mortgage, and then I still have a buffer of 4,000 or so. So in a very simple way, the first step is you can just really budget for those key costs of sales. So real estate costs, outstanding mortgage balance, penalty, any other balances, any other debt payouts that would need either for qualifying or just because they want to pay those out when they're selling, and then you'll get that amount that's available for down payment and closing costs for that purchase. And then the next step is you can really go and budget for that purchase, working out what property transfer tax would be, or purchasing taxes. So this is a BC tax, and then on top of their down payment, what their minimum down payment requirements are, any other costs, so legal and all of that side as well. And then you'll find out, okay, well, what do we have to play with here? And then depending on that, you can also run scenarios of, okay, well, if you sell for less than you're anticipating or more than anticipating, how does that change things? How comfortable are you with that? And this really sets you up as the advisor to give them a lot of information or that's really helpful in regards to budgeting, planning, helping them really know where they stand depending on different scenarios for their sale and purchase. And then as always with their strategy session, once you've gone through this with them, you'll see their details here. You can click the send access button. And these are your details here. Click send access and it will send them access to their strategy session when you click this to that email address, and then they can access the numbers and review it with their realtor. You can add their realtor here as well if they have a realtor, and then you can send them their details as well. So it's a really great way to collaborate and budget for sale and purchase files. If you have any questions, please leave them in the comments. We'd love to hear your feedback. Thanks.